What's up, everybody? It's Levi from Wall Street Survivor, and you're probably wondering what happened to the stock market this week. So it's been a wild week. A lot of us are confused, upset, don't know what's going on. But here we're going to try to explain it all in a brief recap of exactly what happened with GameStop, Wall Street Bets, Robinhood, Elon Musk, politicians. Everybody's getting in the mix. It was a roller coaster of a week, and we're going to go through day by day and tell you exactly what happened, hopefully so that we can all come to a better understanding of exactly what is going on and how this is going to play out in the future. So the main overarching theme of this week is that it is probably the most public clash between retail investors and institutional investors that we have seen in modern stock market history. And just to explain, retail investors are common investors like you and I, and institutional investors are big money hedge funds, Wall Street billionaires, and people who make a living off of investing and can move massive amounts of capital. Traditionally, in the stock market, institutional investors have always had the upper hand, and for most of stock market history, it took a lot of money and a lot of power to be able to even get involved in the stock market in the first place. Over the past couple years, it's gotten a lot easier to get involved in the stock market, and therefore the population of retail investors is growing massively. What happened this week was that retail investors directly opposed the plan of a lot of the hedge fund and institutional investors, forming a public battlefield, and for the first time in history, actually succeeded, at least in the short term. A lot of the controversy this week has been centered around a company called GameStop, which is publicly traded and has been on the brink of going out of business for the last couple years. Institutional investors had bet a lot of money against the stock, and retail investors decided to band together to try to oppose the institutional investors' position and drive the stock price upward. So before this week and why GameStop found itself at the center of this controversy, you have to understand a few things. At the beginning of this year, GameStop announced a lot of pretty good news for the company, which usually drives a stock price up, at least in the short term. They've changed around some of their management, which a lot of people are in favor of, and they had a really good holiday sales season, and their sales were up over 500% compared to last year, which is pretty crazy. So naturally, the price of the stock was going to jump on that good news, but there's a little more to the story here. A forum on Reddit called Wall Street Bets picked up the good news about GameStop and started generating some internet chatter about the future of this company. Because of this good news, a lot of retail investors under the forum Wall Street Bets on Reddit began buying the stock and generating a lot of momentum for it, even past the press releases that came out. And it all came to a head on Monday of this week when all of a sudden, out of nowhere, the volume of GameStop shot through the roof. Not only was there really good news about the stock, but also there was a massive group of people involved in what the stock's price was doing and basically investing in it to continue to drive the price upwards. During all of this, there was a discovery that GameStop was also heavily shorted by the institutional investors, and this drove the mania and internet chatter even further. See, what this massive group of internet traders found was that if they could increase the price of the stock, they could cause institutional investors to lose a ton of money, because all of these positions that bet that the price of GameStop were going down had the potential to lose an infinite amount of money if the price continued to skyrocket. So here's what happened. Monday, all of a sudden, the volatility and volume of GameStop shot through the roof. At one point in the day, the stock price had doubled, and then it went entirely negative for the day, and the New York Stock Exchange actually halted trading several times throughout the day. GameStop was traded more than any other stock in the S&P 500 on Monday, and it closed up 18%. People started getting worried about volatility and exactly what was going on with the price of this seemingly insignificant stock to most people. But then Tuesday comes in and famous investors like Elon Musk came to Twitter and started talking about what was going on with GameStop, driving the attention up exponentially. On Tuesday, the price of GameStop stock almost doubled, closing at $150 per share. The forum where this all started, Wall Street Bets, gained 1 million users almost instantly, and the storm was just starting. By stock market open on Wednesday, with the influx of new members to the Wall Street Bets forum and national news coverage by most major news networks, GameStop shot through the roof. One of the major hedge funds that had bet against GameStop was forced to close out its shorting position and had to raise $3 billion of loans overnight just to stay in operations. GameStop stock over doubled in one day, over 100% returns, and Reddit users started targeting other stocks like AMC, which was up 400% on Wednesday, and Bed Bath & Beyond. Wall Street Bets actually gained so many users on Wednesday that it had to go private on Wednesday night in order to ensure that it was following Reddit's community guidelines and that new users understood exactly what was going on in the forum. As if there wasn't already enough chaos, by market open on Thursday morning, many of the champion retail investor brokerages had to restrict trading on GameStop and several other stocks that were targeted by Wall Street Bets in order to maintain their operations. Now, this just added fuel to the flame because many retail investors were accusing Robinhood of market manipulation by not allowing people to trade these certain stocks. Robinhood didn't do themselves any favors and issued several vague statements throughout the day, not really explaining exactly what they were doing. But if you want to know more about why they did what they did, check out the video linked in the description below. Outrage ensued all over social media and the internet. Some politicians even weighed in, talking about how there should be more regulation and how brokerages should reverse their decision to limit trading of these stocks. And Robinhood continued to make more vague statements, not really explaining themselves very well at all. It turns out that Robinhood and other brokerages were not trying to limit trades by retail investors at all, but they were actually unable to operate because they're required to make deposits based on the amount of trades that they predict are happening in their platform throughout the day. And because of all of the volatility around these certain stocks, the price for those deposits increased 10 times just for that day. Robinhood physically did not have enough money to meet the requirements for these deposits, so they were forced to shut down the trading and had to raise $1 billion overnight between Thursday and Friday just to reopen the trades for those stocks, even in a limited capacity. All of this caused GameStop stock to fall by 44% and massively disrupted the movement that was going on, creating further and further chaos. By Friday, most brokerages had figured out a way to reopen trading, at least in a limited capacity, and GameStop shot up 67% and closed out the week up huge. Brokerages, institutional investors, and innocent bystanders wondering what the heck was going on slid into the end of the week and basically an avalanche of chaos surrounding the entire stock market. So there's what happened every single day this week with this entire controversy, and that begs the question, where is this going to go next week? Will the chaos further ensue? What's going to happen to GameStop's price? And will more and more institutional investors and hedge funds be forced to close their positions and solidify massive losses for their investors? Well, at the end of the day, it's still kind of a game of chicken. Many retail investors are still holding the stocks that they originally bought, and institutional investors are still holding their shorts by and large. So it's highly likely that the game is going to continue into next week and the struggle will continue. Now, I'm not a lawyer, so this is all speculative, but it's highly unlikely from what I've read that any of the lawsuits against Robinhood or any other brokerages are going to gain any further traction, because it seems at this point like they were operating within their legal means and restricted trades purely for operational integrity. Ultimately, I think it's awesome that this week a ton of new people were introduced to the stock market and hopefully are given the opportunity to learn exactly what's going on, what a short squeeze is, what the history of the clash between institutional and retail investors look like, how brokerages are able to operate, and what exactly they are allowed and not allowed to do. And hopefully this week causes everyone to learn a little bit more about the stock market, exactly what the risks and the rewards of being a part of it are. It could definitely be dangerous if a ton of people start hopping in on the trend, but I really hope that people take this as a learning opportunity more than anything else, and we're gonna see what happens in the future as this saga continues. And of course, I'm no financial advisor, but please be smart about what stocks you buy this week. Meme investing is not successful over time, and ultimately you want to be looking at the value, the underlying value of the companies that you're buying stock in. It takes a significant amount of financial analysis and knowledge to understand exactly what determines a stock price, so don't get burned by the hype. And at the end of the day, that's what we're here for, to keep you guys updated, educated, and informed about what is going on in the stock market. So make sure you stay tuned so that hopefully we can all learn more about the stock market together and what the actual value of it is outside of just meme investing. Make sure you like this video and subscribe to the Wall Street Survivor channel. Also, don't forget to comment what you think is going to happen this coming week in the stock market and what you'd like to learn more about from us. That's all for today's video. Thanks so much for watching, and I'll see you guys soon.